Capri Global is the company that I'm talking about. They've delivered a very strong quarter, first quarter, healthy growth, improved margins, robust profitability. We have Mr. Rajesh Sharma with us, Managing Director at the company with us. Mr. Sharma, good morning. Great to have you with us on the program. Prashant this side. 62% AUM growth, profits have doubled. But, those are great numbers. But if you look at stage 2 assets, that has gone up to about 1,200 odd crores compared to about 800 crores last time, right? That is about almost 50% growth on a quarter-on-quarter basis, while stage 2 provision coverage has fallen from about 12% to 9.4%. So, Jibert, you want to sort of tell us what happened there? How much of this increase will get fixed, and what's the risk? How much of this is at risk to falling into stage 3, sir?
Good morning and thank you. So I believe that always first quarter we always see little jump on delinquencies because last quarter a lot of contest, lot of work happens on the delinquency in the business side. Having said that, gold loan prices have also been stable. So the delinquency on the gold loan in the stage 1 and 2 increases. But the moment gold loan account slippage in the stage 3, before that, the collections are really increased and auction notices are issued and the accounts are rolled back. So I don't see that the stage 2 will majorly impact the stage 3 and there will be any spike in a major way in the NPA.
Okay. So bulk of this increase in stage 2 on a quarter-on-quarter is from the gold loan segment? Is that what you're saying?
Yes.
Fair enough. And typically gold loans, there are actual realized credit losses are negligible so far. We've not seen that with other players as well.
We have seen the gold loan prices as compared to last quarter have fallen 4%. Correct. Not in the stable. So when the gold prices have going down and stable in both the situation, your default ratio improved. When the gold loan prices were on the increase, the defaults were very low because the cases were getting balance transferred or they're being topped up. So that scenario is now changed. But gold loan portfolio delinquency remain in our control. You can always auction the gold.
I just had on gold loans, just one more, because it's the dominant driver. You're especially focused on it. I think about 50% of the book is gold loans now, almost 50% now. While it's growing rapidly, is it, if you look at the number of customers, I don't think that is keeping pace. That is down a little bit, right? So is it the same customers increasing, borrowing more? Give us a sense of that, Mr. Sharma.
Customers have increased to about 7,40,000, 48,000. It's increased by 5-6%. So I believe that, and they're unique customer. I'm not talking about the live account. Live account, some customer may have more than one. The live account is about 11 lakhs, but the unique customers are 7,48,000. So same customer keep borrowing, but there is a increment in the customer acquisition, and growth is coming not only from the existing customer, but also the addition of the new customer. In this special program, we run for the acquisition of the new customer as well.
All right. Hi, Mr. Sharma. Good morning. Good to see you. What is the LTV on your gold portfolio right now?
Gold portfolio LTV is about 71%.
Okay. All right. 71%. So you're in an okay zone till now. Got it. Because the worry is if gold falls a little bit more, say another 10-15%, then you could be in a bit of a flux, but you seem to have some kind of cushion on that one. Got that. The other big trigger that the street looks forward to on Capri Global is, since you have a high proportion of your book that, skewed towards gold, is what is the AUM on your gold portfolio per branch? At one point of time, I think you were at around 10-12 crores or thereabouts. And the leader, that is Muthoot, I think is at more than 30 crores. And you were talking about narrowing this gap. So what is it right now and where is it headed?
So we closed the AUM about 19,000 crore plus and the branches are 1,000. So we can easily say our per branch AUM is about 19 crore.
Okay. All right. 19 crore. And you think that it goes up from here on? What are the number of branches you're looking at? I think when you joined us last time around, you were talking about 850 going to 1,000. Now you're saying you're at 1,000. So number of branches and AUM, gold AUM per branch.
So now this year we have planned to add another 400 branches in the gold loan side, and these branches should be operational by end of third quarter. So I think by this year end will be about 1400 branches minimum, and those branches once come. So of course the new branches will not have the same AUM. So we have to say that the old branches AUM will still be more than 22 crore by the end of the year, but the old loan branches will be, since we are starting, the AUM will be less than 5 crore per branch.
Right. Okay, let's talk about profitability, Mr. Sharma. Net interest margins at almost 10%, right? 9.7%. Could you give us a sense of where this is? So yields went up, cost of funds were lower the quarter. What's the sustainable net interest margin as the mix finally stabilizes? By the way, has the mix at 50% gold loans, is this where you're going to be? And what's the sustainable net interest margin you're looking at?
I think this is sustainable net interest margin. This is something we see this we will be able to maintain. I don't see that we'll be able to make it improve, but if we are able to sustain this will be a good amount of profitability with the ROA in the range about 4.5% and ROA in the range about 21%. And I see gold loan portfolio should remain in the range about 55% or so.
Got that. Would you need, we have some slightly longer term targets as well, right? Short term target, I think 65,000 crores AUM by FY28. That's the aim, but, 1,25,000 crores by FY31. Would you need to raise external capital? Yeah.
With the mix of co-lending, direct assignment, and the potential reaching of Tier 2 capital, I think we are still good to go for about a year or so. And we'll see only in the first quarter, depending on the growth plan and all, what is the timing we need to see about capital raise and how much we should reach.
This is Q1 of 28. You will see. You will review.
Yes.
Okay. Got that. Mr. Sharma, we'll leave it there. Thank you very much for joining us. We wish you all the best of luck. Appreciate your time here on CNBC.
Thank you.
Okay, well, I think that is the management of Capri with some perspective. Bino, I think you're still with us. Bino, I don't know if you heard that conversation. Any thoughts on, I don't know if you track Capri, but, NBFCs as a space is starting to do well.
In India, NBFC is a sector that is sort of a proxy for consumer demand, discretionary consumer demand. So two things that will drive NBFC space will be consumer demand and on the other side, cost of capital. We are living in an environment where there is a lot of volatility. The Middle East war, still we don't have clarity which way it is going. We don't have clarity on oil and inflation, which can have its impact on interest rates and cost of capital. So this kind of creates an environment where it becomes a little difficult to take calls on NBFC as a space. But assuming the war in the Middle East doesn't flare up, oil remains well within $80, $85 range where it is today, and interest rates remain benign, we expect good momentum in the NBFC profit side, because all this will lead to consumer demand, discretionary consumer demand picking up, and at the same time, cost of capital remains low, which can be a great environment for NBFCs. So as of today, we are positive NBFCs, but of course the caveat is oil shooting up again and interest rates going up.
Okay, got it. Bino, we request you to stay with us for a little bit longer. We'll take a short break. We come back. We'll continue our chat with